Good evening to all. So today we are going to start the FEMA, right? FEMA 1999, so-called FEMA. Earlier there was an act called FERA. May I know who all are present? Good evening to all. So we are going to start the most important topic of our economic law of CA final, that is called FEMA 1999. So let's start the FEMA part, right? So this is the first chart. That chart is already uploaded on ICAI portal, ICAI learning portal. So you can download these charts from there, right? And along with this, we will refer the ICAI study material also. Good evening, Kaushiki, Viraj, Prashant, good evening. Okay, so can we start the FEMA part? Each and every line is important. Each and every concept is very much important in the FEMA part. Okay, let's start the FEMA. So if FEMA came into force on 1st June 2000, this is the date which you need to remember. Maybe in the MCQ part, examiner will ask a question like what is the effective date for the implementation of FEMA? Act came in the 1999, but the effective date of this FEMA is 1st June 2000. I think so this is clear. Now, what is the applicability of FEMA? We will understand what is non-applicability of FEMA. So that FEMA will not apply over citizen of India. The person who is a citizen of India who are outside unless they are resident in India. It means there are two concepts. First is citizen of India. Second is resident in India. So the FEMA emphasize on resident in India concept rather than the citizenship concept, right? So what is relevant? What is relevant for the FEMA applicability? The person should be resident in India or the person should be resident outside India and he is transacting with the Indian person. So then only the FEMA applicability, right? The criteria for identifying the applicability of FEMA over the person is the residentialship, not the citizenship, right? So before the applicability of FEMA, there is an act called FERA. FERA in 1973. Now they have repealed this act, Foreign Exchange Regulation Act. Now what is the difference between FERA and FEMA? There's a difference of R, there is a difference of M. R stands for regulate the foreign exchange. M stands for management. We will manage it with the inflow and outflow. We will manage the foreign exchange. Earlier there was a regulation, there was a controlled by the banking system, by the RBI, by the government also for the foreign exchange. And that change will affect from regulation to management arises due to the new economic policy which came into force on 1991. Now, what is the object of this FEMA? So first point is it facilitates external trade and payment, right? This is the basic object of this FEMA. It facilitates external trade and payment. Second point, for promoting the orderly development and maintenance of foreign market in India. This is also the concept of, right? This is also the concept of FEMA. Like it needs to enhance the foreign market in India. Now, in the first chart, this is the most important concept, right? First point, it applies to whole of India, means there is no exception, that is Jammu and Kashmir and all. It applies to whole of India. This is the first point for the applicability of FEMA. Second point, it applies to all the branches, offices, agencies who are outside India, situated outside India. But say, for example, there is a subsidiary company of Reliance which is situated in London, but that owned or controlled by a person resident in India. The Reliance is controlling, Mukesh Ambani is controlling. So on that branch, on that offices, on that agencies, FEMA will apply. This is the second point. Third point, if any person has committed any contravention outside India by any person to whom this act applies, means the person should be person resident in India. So in that case also the person will be punished according to the FEMA. So this is the applicability part of FEMA, right? So let me know the first chart is clear, right? The most important topic under this first chart is applies, right? It applies to 3 points are there. First is whole of India. Second is all the branches, agencies, offices which are situated outside India, but they are controlled, owned by the person resident in India. Then also the FEMA will apply. Third point, if any person has committed a contravention outside India, but on that person the FEMA applies because that person is a resident in India, that also applies to the condition of the FEMA, right? So this is the first chart and this is the applicability part of this FEMA. So let me know, is there any doubt in the first chart regarding the applicability of FEMA? Is there any doubt regarding the applicability of FEMA? Is there any doubt regarding the applicability of FEMA? The charts are already uploaded on ICI portal. You can download from there. Okay, so let's start with this concept from our study material also. So this is the introduction part and this is salient features and this is enforcement, basic structure of FEMA. So accordingly, this is the very small act, means there are only 49 sections, but many are notification rules and these and that everything prevails. Now, second topic, preamble, extent, application, commencement of FEMA. So this is the objective of FEMA, facilitate external trade and payment. For promoting the orderly development and maintenance of foreign exchange market in India. What is extent? Extent, it applies to whole of India. Extends to whole of India. In addition to that, it extends to all branches, offices outside India, owned or controlled by the person resident in India. Also to any contravention thereon committed outside India by any person to whom this act applies, right? So this is the extent part. This is the applicability part of FEMA. Is there any doubt in first chart? So we can move towards the second chart. Now, before going towards the provision, before going towards the section of the FEMA, first we will understand the some definitions. And these definitions are important one. First point. These are the important definition. First definition is authorized person, which is prescribed in section 2 clause C. Now, authorized person in simple terms, the person who is authorized by the RBI under section 10 to deal in the foreign exchange or to transact or to exchange the foreign exchange. The basic purpose of this authorized person means that person is authorized by the RBI and that person is only authorized to deal in foreign exchange, right? So this is the authorized person. Means as who all are covered in this authorized person definition. First is authorized dealer. Second is money changer. Third is offshore banking unit. Offshore banking unit means a person who is authorized. Suppose, for example, there is a SBI in India and there is a branch of SBI in London. So that is called offshore banking unit. Any other person who is authorized under which section? Under section 10 for the two purposes. Deal in foreign exchange, deal in foreign securities. So this is the definition of authorized person as prescribed under section 2C. Remember, this definition we are going to again see in the section 10. Right? There we need to learn who is authorized person, what are the duties, what are the powers, what are the obligations on this authorized person. So is there any doubt in the definition of authorized person? Then we will move towards the definition of capital account transaction. Is there any doubt in this definition, authorized person? Is there any doubt? Okay. Next definition is that is called, and this is the most important definition, capital account transaction. Now, in the next chart, we will see the definition of current account transaction, right? So basically, there are two types of transaction. There are two types of definition. First is capital account transaction, and second is current account transaction, which we will see in the next chart. Now, what is the difference, right? What is the difference? If we outline the difference in one single point, the items which are mentioned in balance sheet that will fall under the definition, under the concept of capital account transaction, and the items which are mentioned in profit and loss account that will fall under the transaction of current account transaction. This is the broader concept, right? Now, means a transaction which alter the assets or liabilities plus contingent liabilities outside India of a person resident in India, right? So we will see the person resident in India, PRII. Next, or the assets or liabilities in India of a person resident outside India, right? This is the concept which is prescribed in capital account transaction. Section 2E will apply in that case, right? Section 2E will apply in that case, right? So what are the transactions covered under the capital account transaction? A transaction which alter the assets or liabilities or contingent liabilities outside India of a person resident in India, or assets liabilities in India of a person resident outside India, and it includes a transaction as prescribed in section 6 subsection 3. It means section 6 deals with the capital account transaction, section 5 deals with the current account transactions. So in that case, you need to learn the section number also, and these are the simplest one, right? So capital account transaction means a transaction which alter the assets and liabilities, of a person, assets and liabilities of a person who is resident in India, of a person resident. The person, means the alteration of assets and liabilities of a person resident in India. Remember one thing, for applicability of FEMA, there has to be a person who is dealing outside India, and the person who is transacting from India, means a person who is doing transaction from outside to outside, that will not covered by the FEMA, right? Mr. Ram is entering with a transaction with Mr. John, a person who is residing in America. So that will fall under this FEMA concept, right? So this is the definition of current account transaction. I think so that definition is clear. Just a minute, I can log in again. Okay. Next definition is, there's a definition called currency. So currency definition is prescribed in section 2H. Now, currency includes what? Currency includes all currency notes. Is there any doubt till both the pages, both the charts? Is there any doubt? All currency notes are a part of currency. Postal notes, postal order, money order, check, draft, letter of credit, which is used for import and export transaction, that is letter of credit, bill of exchange, other instrument notified by the Reserve Bank of India, that will fall under the definition of currency, right? So currency, there is a section called 2H. That section is not at all important for the applicability of examination part, but then too we need to remember what are the items included in the definition of currency. So in the second chart, two definitions are important. First is authorized person, and second is capital account transaction. Kaushiki, clear? Perfect. Okay. So in this chart, authorized person and capital account transaction, both definitions are important, because we will learn in the respective section 10 and section 6 also. Now, this is the most important definition, right? And current account transaction, in a single line, we can recall the transaction those are hit by in the P&L account of the company or any person, that is called current account transaction. Now, so what they have mentioned, transactions means a transaction other than capital account transaction. This is the simplest form of definition. Who is Ram? Who is not a Shyam, right? Same concept will apply here. The current account transaction means a transaction which are those not a capital account transaction, that will fall under the current account transaction. But law has prescribed 4 types of transaction which fall under the concept of current account transaction. The definition is prescribed in 2J, right? First point, payment due in connection with foreign trade, services, short-term banking in the ordinary course of business, that will fall under the definition of current account transaction. Second point, you took a loan transaction will fall under the capital account transaction, but interest on loan will fall under the current account transaction. Remember one thing, we have covered the interest on loan, right? Interest on loan, that will cover under the definition of current account transaction, and the net income from investment will fall under the definition of current account transaction. That investment and that loan will fall under the definition of capital account transaction. So don't be misled by the definition. Like what is covered in section 2J. 2J is covered payment due as interest on loan. So they are talking about the interest part, and they are talking about the net income from investment. I think so first and second, both points are clear with respect to capital current account transaction definition part. Both points are clear? Or is there any doubt with both points? Third point. Remittance for living expenses of parents, spouse, children residing abroad. Law will specify that if I remit some amount to my parents, spouse, children who are residing abroad, so that is also fall under the definition of current account transaction. Expenses in connection with the foreign travel, education, medical care of spouse, parents, children. Law is specified that will fall under the definition of current account transaction. So overall, there are 4 types of payments which can be covered under the current account transaction. In fact, many more definitions are covered. We will see in this schedule part, schedule 1, 2, 3 are prescribed there. Okay, perfect. So this definition is also clear. Current account transaction, 4 types of payment, right, covered under the definition part. Now, what is foreign security? If I say a security which is issued by the company, outside India, and that security will redeem outside India. Now the question arises, why we will learn this concept in FEMA? Obviously, there has to be one transaction which falls within India and the other transaction falls outside India. Remember, first, foreign security means we are ensured that particular shares, stock, bond, debenture, other instrument expressed in foreign currency. But now the important point, but their redemption, dividend, interest payable in Indian currency, this is the definition of foreign security. Section 2O stands for foreign security. I think so. Definition of foreign security. Obviously, one thing will remain in the India. Then only we will learn this definition under the FEMA. Otherwise, how we will, like suppose for example, Apple has issued some shares outside India, and that will redeem that dividend, that interest will be paid outside India only. Then why we will learn this definition under the FEMA? So the currency, the security is issued outside India, but their redemption, dividend, payment payable in Indian currency, then only the FEMA will apply. So I think so. Definition part 2, chart 2 also clear. Is there any problem? Is there any problem? Right. So they have covered the definition in the study material part. Executing authority as prescribed in section 16. Okay. So that definition is not important. Second definition, appellate tribunal. Again, that is prescribed in section 18. That is not important. Authorized person, we gone through this definition. Capital account transaction, already gone through the definition. Currency notes, current account transaction, right? So this till this definition, it is clear. Correct, first point. Kaushiki, which one? Okay, so this is clear, right? Now, move towards the third part. Third definition part. Current account transaction, point number 1. Okay, current account transaction, point number 1. So it is payment due, like we need to make any payment with respect to foreign trade, services, short-term banking. right? Short-term banking in the, so that point applies to a body corporate. That point applies to the company part. Company is paying for the services which they have rendered during the financial year in the ordinary course of business. For this, they are making a payment. So this will fall under the current account transaction. I think so. Now this is clear, right? Question box, you can, yes, you can mention the question here only. Okay. Now, next chart. Next definition is foreign exchange. Section 2N prescribes the foreign exchange definition. It includes what? Now, this is a little bit easy definition, right? What they have mentioned? All the deposits, credit balance payable in any foreign currency that will fall under the definition of foreign exchange. Foreign currency means you are paying with the foreign currency. So that deposit, credit balance payable in foreign currency, we can call as a foreign exchange. Now, both points are opposite points. First point, second point, sorry. Draft, DD, traveler check, letter of credit, bill of exchange drawn in Indian currency, but payable in foreign currency, that will fall under the definition of foreign exchange. Now reverse the situation. Draft, traveler check, letter of credit drawn by a person or a person outside India, but payable in Indian currency, that will also fall under the definition of foreign exchange. Mansa, currency is not, cryptocurrency is not covered under the definition of currency. That is altogether a part of government already treated as a money laundering part, right? Now, next is person, definition of person, same as income tax definition of person. Person includes an individual. I think so. Definition of foreign exchange is complete, right? Individual, HUF, company, firm, AOP, BOI, every artificial judicial person other than above, any agency, office or branch owned or controlled person by such person, that will fall under the definition of person. Viraj, there is a question from Viraj. Infosys stock listed on foreign exchange market. Is the share are foreign security or Indian security? Infosys shares are listed on, for example, they have their GDR, ADR listed outside India, right? American Depositories, Infosys ADR, if you can search. Now, they are the foreign security. Why they are foreign security? Because we will pay the foreign exchange. We are going to issue that security in the foreign country, but their dividend will pay from here only, right? Because they will issue the ADR, GDR outside India, and they can collect the fund in respect of shares to the India part. So that will fall under the foreign securities. Okay. Now, this is the important one. What is repatriate to India? Repatriate means bringing into India. Repatriate to India means bringing into India the realized foreign exchange. So law has clearly specified whatever foreign exchange you earned by providing your services, by providing your goods and services, each and everything, you need to realize that foreign exchange from the debtor and accordingly realize and repatriate to India as soon as possible without undue delay. Now, how we can treat the transaction as that person has repatriated to India or not? First point, you need to realize the foreign exchange and you need to sell the foreign exchange to the authorized person in India, and that person will convert a dollar into rupees and he will hand over you respective rupees amount. That in that case, we will classify this as a repatriation to India. Okay, Viraj, thank you. Second, the holding of realized amount with authorized person up to a notified by the Reserve Bank of India. You can keep your foreign exchange with you only, but the limit prescribed as per the RBI is prescribed up to $2,000 rupees notes. You can withhold with yourself in your wallet, and includes use of realized amount for discharging the debt and denominator. This is a different part, right? Now, So for repatriation, there are 3 points. First is selling an AP. This is the simplest one. Second is you can withhold such amount as prescribed by RBI. This is also simple point. Third is little bit technical point. Now, what is the technical read? Suppose, for example, you are going to realize $20,000 from outside India. So according to the repatriation definition, you need to repatriate that amount to India. But against this or anything else, you have the liability of $5,000. So what you have done? Out of this 20,000, you just set off this liability of 5,000. So net amount, that is called $15,000. You repatriate to authorized person, and accordingly he exchanged for rupees. So now the important point, right? This is a repatriation. Yes, this is a repatriation. So under this point, this is also treated as a repatriation because you have used the amount to reduce your debt. So 5,000 is also treated as a repatriate amount. There is no default from the person part. I think so. Now we can read these points. Include what includes use of realized amount for discharge. Use of realized. We realized $20,000. For discharge of our debt, $5,000. Denominated in foreign currency, so that will be treated. $5,000 will also be treated as a repatriate to India. I think so. The definition is clear with respect to repatriation part. Definition is clear. Is there any doubt in all the 4 charts of FEMA? Is there any doubt? Let me know. Is there any doubt? Is there any doubt in all the 4 charts of FEMA? 3 definition. First is applicability chart. Okay. Now move towards our study material part. So this is the definition of export. We will see foreign currency means any currency other than India. So this is the definition of foreign exchange. Proven. Okay. Fear of FEMA gone because of you. Thank you, sir. Okay. Viraj, there is a doubt. So reputation repatriate to India. So repatriation means bringing to India. So law has prescribed 3 situations in this. If you comply any of these situations, we can call that you have not made any kind of default. You have not made any kind of offense. You properly repatriate the foreign exchange into India. First is whatever amount you realize by providing your services outside India, whatever amount you realize, you need to sell that foreign exchange to authorized person. He will exchange in for rupees. This is the first point. Second point, you can withhold that amount as prescribed by RBI, 2,000 up to $2,000. You can repatriate. Okay, but means you can withhold. Third point, you have used any such amount for the set off of your debt, which is represented in foreign exchange. So in our example, you received $20,000, and against this $25,000, you have a liability, you have a debt of $5,000. So out of this 20,000, you repay that $5,000. So law has prescribed like 15,000 is actually repatriated, but $5,000 which you have used for the purpose of repayment of any debt and liability, that will also treated as a repatriated to India. I think so, Viraj. Now it is clear. Partially clear. Perfect. Okay. Foreign security. Foreign security means any security in the form of shares, stock, bond, debenture, any other instrument denominated or expressed in foreign currency, and includes securities expressed in foreign currency, but the important point, where redemption or any form of return such as an interest, dividend is payable in Indian currency. That's why we will deal the definition of foreign security. Perfect, Viraj. Import. Okay, this is the definition of person, right? So this is important point. And now what is import? Everybody knows what is import. Import means bringing into India any goods and services. I am not going to provide any kind of vague definition. Now, what is export? Export means taking out of India to a place outside India. Oh, this is a new concept which we didn't know, like what is import and what is export, or providing of services from India to a person outside India, that will also fall under the definition of export, right? So I think so. Now this is topic, and that topic is called person resident in India. And this is the favorite one also. Okay. So till that chart, till the definition part, everything is clear. I assume that. So now we can start the most important definition, that is called PRII. Examiner will ask a 5 marks question from there. Okay. So can we start the definition of PRII? And this will take minimum 35 to 40 minutes. Yes, DT concept starts. Okay, so let's start, right? Now, the definition of PRII. So section is 2V. This is not a 5, this is a V. 2V prescribed the definition of PRII. PRII means person resident in India. And PROI, we will recall again and again, PROI, person resident outside India. Okay, Kaushiki, start. Now, this is the most important definition, right? Let's understand this. Person resident in India means, suppose, for example, I am a person resident in India. I can call myself as a person resident in India as per the definition of FEMA, it is 2V. A person who resides in India for more than 182 days. In fact, proven this definition of 182 days is vast than income tax definition, right? Because there is so much of ups and downs. Okay, so who is a person resident in India? If we want to check the Mr. A is a person resident in India or not, first we will go to the preceding financial year. In this preceding financial year, we will check Mr. A has resided. Say, for example, as far as current is, so preceding financial year is 22-23. So if we want to check Mr. A on 25th May 2023, we need to identify Mr. A is a person resident in India or not. So what we will do? We will go to the previous financial year. Previous financial year is 22-23. And under this 22-23, we will check Mr. A resident in India for more than 182 days, means 183 days. But it does not include. Now the definition of FEMA starts, right? So this is the definition of, right? So under the first definition, under the first point, so first point talks about person should be resident 182 plus. Now, if that person is going outside India, now the important point. Now, if that person is going outside India for employment, for business vocation outside India, or for any other reason, as his intention to stay outside India for uncertain period, now the point will change. That person will be treated as a person resident outside India. I think all will confuse, right? Let's again take example. For example, some Mr. A, we need to check, ignore the A, we will take as a Sharmaji. Right? Now, Mr. Sharmaji, we need to check he is a person resident in India or not, or a person resident outside India. For this, we need to check the two conditions. Employment, vocation, business vocation, or uncertain period. Right? So first point is Sharma ji already resided in India in the preceding financial year, that is 182 days. So we can call as per first condition, he is a person resident in India. But if you want to prove any person is a person resident in India, you need to fulfill two conditions. Means in the current financial year, if he gone out of India for the purpose of employment, and this is a previous financial year 22-23, and this is a current financial year 23-24, right? If Sharmaji went abroad for the purpose of employment, for the purpose of vocation, business, or for the purpose of any other purpose as an intention to stay outside India for an uncertain time period, now the definition changed if this is yes. Now, the final answer is Mr. Sharmaji will be treated as a person resident outside India. Means to identify any person as a person resident in India or outside India, we need to first check two conditions. First is 182 days. If Sharmaji resides in India for less than 182 days, then outrightly from the first point, he is a person resident outside India. But if he fulfills the first condition, then we will check like first, second condition, whether he goes outside India for a three purposes, employment, business, vocation, uncertain time period as an intention to stay outside India. In that case, he will be directly called, irrespective of fulfillment of first condition. We can call Sharmaji as a person resident outside India. Now you will say, sir, tell me, other than these three reasons, say for example, Sharmaji gone for doing MBA from Harvard University, right? Hard work university, right? Hard work. Okay, so for study of MBA degree, in that case, that will not fall under this definition of employment, business, vocation, uncertain time period. So in that case, he will be treated as person resident in India. Means if a person gone out of India other than 3 points, employment, business, vocation, uncertain, if a person goes outside India for the purpose of studying outside India, then he will call as a person resident in India. Now, before starting your mapping of your mind, let's take out this. Gone out of India or stay outside India for employment, for carrying on business, vocation, or any other purpose, in all the cases, that person will be treated as PROI. In any other case, person will be treated as PR, padne ke liye gaya, right? Study purpose. Okay. I think so that half provision of PRII is clear, right? Half provision is clear. Half provision of PRI is clear. For identifying any person as the person is a PRII, we need to fulfill two conditions. First is 182 plus days. And second is if he gone outside India for the three purposes, then we can directly call is the person is a PROI, otherwise is PRII. Kaushiki, okay, perfect. Yeah? Okay, so it is clear, right? First point is clear. Now, second point. If a person, now the situation will reverse. Right? Now the situation will reverse. If the person goes outside India for three such reasons, we can call such person is a person resident outside India. But if the person comes to India for three reasons, then we can call as a person resident in India. Comes to India or stay in India for 1, 2, 3, three reasons, then we can call as a person resident in India or any other purpose. Suppose, for example, he came for doing the MBA from DG universities, right? Or from what we can say, there is a university in Delhi, famous university, right? So person resident in India, PRII means Viraj, person resident in India. Okay, so this is the definition. If a person goes outside India for three reasons, we can directly call the person is a person resident outside India. If the person comes to India for 3 reasons, the situation will get reversed. Right? See this beautiful chart in front of you. Right? So we can call that person as a person resident in India. And if he comes to India for the purpose of studying through Banaras Hindu universities, BHU, we can call such person as a person resident. Yes, JNU, yes, Kaushiki, correct. Right, so it is a person resident outside India. I think so. Now the definition of PRII is clear. PRII is clear. Definition. Now this is the technical point, right? A person who has gone out of India or who stay India in either case. This. A person who has come to stay India in either case. Otherwise, then this, right? We simplified this concept through this concept only. I think so. Now the definition of PRII is clear. 110% this definition is clear. Then we can move towards the question part that will explore the concept. Perfect. Kaushiki, even if 182 days stay not satisfied, come in for such. No. Remember one thing. For the person, if we are satisfying the person as a PRII, there are two conditions. First condition is more than 182 days. If a person, now let's take an example of Kaushiki. If a person, like I will take two examples. First example is, if a person comes to India, if a person is residing in India for more than 183 days, we can call such person as a person resident in India as per condition 1. But we need to check the condition 2 also. And if he goes outside India, then we can call the person as a person resident outside India. Okay, let's take an example over here. For example, we have a condition 1, we have a condition 2, right? Mr. A resides for, okay, you all will tell India for the purpose of employment. Now tell me, Mr. A is treated as a PRII or PROI. This is condition 1, this is condition 2. Thank you, Praveen. Perfect. So answer is, we will highlight PROI. Okay. Next example, we will take a black color. Okay. Mr. B, he resides for 165 days and gone out of India for the purpose of studies. Kaushiki, your example, right? So the Mr. B is a person resident in India or person resident outside India. Kindly mention Mr. A or Mr. B. Otherwise, I will get out. Mr. B is a person resident in India or person resident outside India? Person resident outside India or person resident in India? Mr. B. What is the status of Mr. B? Then we will solve our practical questions, right? Mr. B is a PROI. Okay. Remember one thing, Kaushiki. If the person fails to satisfy the first condition, we need not to check the second condition. From first condition, we can call such person is a person resident in India. First condition needs to be fulfilled first. Then we will move towards the second condition. I think so. Now, Kaushiki, your doubt is clear. Third example. Less than 182 days, that's why PROI. Perfect. We need not to check. If the person is residing for less than 182 days in India, then we need not to check the second condition. Outrightly, we can say the person is a person resident outside India. Mr. C is residing 365 days in India and then he goes for studies outside India. Now, what is the status of Mr. C? 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 He resides in the previous year, full financial year, from 1st April to 31st March till midnight, right? Full year. Okay. Mr. C is a PRII, right? PRII. And if the same example we can take 365, but he goes for uncertain period, uncertain reason, then what is the answer for D? D, what is the answer? Uncertain time period के लिए बंदा बाहर गया है. The person goes outside India for an uncertain time period, then what is the case? PROI, perfect. I think so. The concept as prescribed in section 2V, that is called PRII, is clear, right? This definition is clear. Okay. Okay. So let's move towards the study material part. So this is the definition in your study material part. Hope we gone through the definition as a clear-cut provision from charts only. Okay, now till here we already gone through the concept of PRI as far as individual is concerned. But any person or a body corporate registered incorporated in India means Reliance is a PRII. Now we are talking for company part. Now we are talking for body corporate part. Can you share the example PDF? Example PDF, you can click. How I can share? You can click a photo of this one, right? Example PDF, you can click a photo of this. Yes, Kaushiki, for comes to India, remember one thing. For gone out of India, for comes to India, this is the second condition. First condition always remains the same. That is 182 days. Okay, now move towards the study material part. Then we will solve some question. Okay, so as far as this is concerned, employment and then that and all. So we covered the individual part. Now we will move towards the corporate form. Corporate form is first point. Reliance is a RIL is a PRII. The reason is simple. The company is incorporated or registered in India. Second, any office, branch, agency in India owned or controlled by a person resident outside India. Now, your branch, office, agency situated in India. So law has clearly specified this is PRII. And now the reverse situation is also a PRII. Office, branch, agency situated outside India, but it is controlled by Mukesh Ambani ji. Right? So that is also a PRII. I think so. This is done. Perfect. Right? I think so. Now this is done. This is the whole definition of PRI, and the person resident outside India means who is not a resident in India. This is the most beautiful definition of law. Okay, so this is done. I think so. Now this is done. Now we will solve some questions part. Then we will go towards the definition part. Okay, so this is illustration. This is a table. This is this. This is this. Okay, example. First example. If a person resides in India for more than 182 days during the financial 18-19, then for the financial 19-20, the person will be Indian resident. Acha, there is a one more. You need to check the 182 days concept, means 183 days concept. Remember one thing, this should not be in a consecutive days. Suppose, for example, in April, he resides for 5 days. In May, he resides for 31 days. In June, he resides for 0 days. In July, he resides for 20 days. So by plus all these items, if that comes to 183 days, then our first condition will get fulfilled. Right? So this is your first example. Okay. So if a person resides in India for more than 182 days during the financial year 18-19, then for the financial 19-20, the person will be Indian resident. And for financial year 18-19, one has to consider the previous year and so on, right? This is the concept. Example 1, okay. Example 2, 3. Now we will see the exam questions. Okay. So this is your question for you, right? Let's start. Mr. X has resided in India during the financial year 1920 for less than 182 days. Do we need to read the further, or we can say for the financial year? Okay, for the financial year 1920, he resides for less than 182 days. He had come to India on 1st April 2020 for carrying on the business. Okay. He intends to leave the business on 30th April 2021 and leaves India on 30th June 2021. Okay, determine his residential status for the financial year 2021, 21, 22 up to the date of his departure. Now, so we need to find the person is a person resident in India or outside India for the financial year 2020-21. So for checking for the residential status of Mr. X for the financial year 2021, we need to go towards the 1920, and 1920 he resides for less than 182 days. So this is the clear-cut case that person is a person resident outside India. Continuous stays, yes. So Kaushiki, continuous stay is not required, right? You can take a break. Like for example, it is not necessary that you need to stay lagatar 182 days, right? Continuous stay is not required. Okay. So under the example 2, 2021, the person is a person resident outside India. The example is very simple. 1920, he resides for less than 182 days. Okay. Now, need to find for, I think so 2021, it is clear. 2021, it is clear. 2021, it is clear. Right? Now, move towards the 21-22. For checking the 21-20, we need to satisfy the first condition. And first condition is that person should be more than 182 days, that is 183 days in previous year 2021. Now, he came to India on 1st April 2022 and he left India on 30th June 2021. Matlab, in this financial year, he resides for 365 plus days. So our first condition is fulfilled. Right? I think so. Our first condition is fulfilled. Now you can say this is the simple concept, right? And he left India for the purpose he intends to leave the business on this 30th April 2021 and left India on 30th June 2021. Now, they have not specified the person left for the purpose. So we need to take the assumption. In that case, they have assumed that the person has not left for any of the three purposes, 1, 2, 3. So he would be treated as a person resident in India during the financial year 21-22. Right? For this financial year, he will be pre-RII. Now it is clear, I think so. Now it is clear. Example 2 is clear. For financial year 2021, person is a Mr. X is a PROI, and 21-22 you need to take the suitable assumption, like nothing is mentioned for the three purposes he left India. So we can assume that he left India for other than three purposes, and that purpose we can call as a PRII for the financial year 21-22. I think so. Now it is clear. Okay, next. Question number 3. Mr. Z has resided in India during the financial year 1920. Okay. He left India on 1st August 2020 for United States for pursuing higher studies for 3 years. Okay. Mr. X had resided in India during the financial 1920. Now, he left India for higher studies. What would be the status? 2021, obviously 2021, right? So in that case, PRII, and in this case, that is PROI. I think so. This is clear. Again, I can write. Okay. So for this financial year, PRII. For this financial year, PROI. I think so. Third example, it is clear. Third example, it is clear. Is there any doubt? Is there any doubt? Perfect, clear. Good. Okay, next question. TOEL Limited is a Japanese company. So now we move towards the corporate form. TOEL Limited is a Japanese company having several businesses units all over the world. Okay. It has a robotic unit which has a headquarter in Mumbai and has a branch in Singapore. Okay. So company is a foreign company in the sense incorporated outside India. Headquartered at Mumbai, control the Singapore branch of the robotic unit. What would be the residential status of robotic unit in Mumbai and that of a Singapore branch? Now, what is the purpose, right? First is Mumbai unit. So this is PRII, and the Singapore branch is controlled by the Mumbai. So that is also a PRII. So in both the cases is a PRII, right? This is the simplest one. Now, question number 5. Air hostess. Miss Alia is an air hostess with British Airways. She flies for 12 days in a month and thereafter takes a break for 18 days. Okay. During a break, she is accommodated in base, which is normally the city where the airlines is headquartered. However, for security consideration, she was based at Mumbai during the financial year. She was accommodated in Mumbai for how Singapore PRII? PRII Singapore, the reason is simple. It is owned and controlled by a person resident in India. Branch sense. So this is the point which is slipped from the mind of. Okay, this is the point. Any office, branch, agency in India controlled by a person resident outside India. Just a minute. Okay, right. So this is the definition. This is the definition, right? Any office, branch, agency is owned or controlled by the person resident outside India. Second case, reverse. Any office, branch, agency outside India but is controlled by the person resident in India. Now it is clear? Okay. Move towards the question part, air hostess part. Okay. So Miss Alia stayed in India. Now this is a little bit a tricky question. Miss Alia stayed in India at Mumbai base for more than 182 days in the preceding financial year. She is, however, employed in UK. She has not come to India for employment, business, or circumstances which lead her intention to stay in for uncertain time period. So under this concept, the person are not considered as an Indian resident, even his stay, right? So this is the question in which you need to take the assumption part. If their stay exceeds 182 days in the preceding year, thus Miss Alia must have stayed in India for more than 182 days. She cannot be considered as a person resident in India because she comes to India not for the 3 things. If, however, she is employed in Mumbai branch at British Airways, then she will be considered as a person resident in India, obviously. Sir, what to for improving grasping speed, Viraj bhai? Basically, you need to learn again and again. You need to go through charts again and again. That chart will fix in your mind, right? No issues at all. Okay. So this is the definition. These are the examples of PRII. Move towards the next concept. I think so. PRII is clear. Then we will move towards the next concept. PRII is clear. Is there any doubt in the definition of PRI? PRI is the one of the pillar of examiner favorite question from FEMA. PRII clear. Okay, Kaushik, perfect. Now move towards the next section, that is called section 3, deals with the restrictions on dealing in foreign exchange and foreign security. Basically, this is the simplest one. Section 3, the bottom line is whatever transaction you want to do, you can do through the authorized person only. This is the crux point of section 3, right? Now, restrictions on dealing in foreign exchange and foreign security, no person shall, first point, deal in, transfer any foreign exchange security to any person not being an authorized person. Means if you want to deal in any security, you can deal through and through only authorized person only. This is the first point. Second, if you want to make any payment, making any payment to order of a person resident outside India in any manner, law already specified you can do through authorized person only. If you want to receive any foreign exchange other than authorized person, right? This is not allowed. This is treated as a hawala. Receive other than the authorized person any payment by order of behalf of a person resident outside India in any manner, that is also prohibited. Restriction, no person. If you want to enter any financial transaction in India for creation of any assets outside India by any person, that will also fall under the section 3 concept, right? So this is the sir, I am facing difficulty in grasping at your current teaching speed. Sir, repeat the solution. So I think so. My speed is little bit more or average. So I need to reduce the speed. My speed is okay or it is little bit high? Okay. So again, repeating this section 3. Section 3 talks about whatever, if you want to receive any foreign exchange, if you want to make any foreign payment, if you want to enter any financial transaction, or if you want to deal in any foreign securities, foreign transaction, then you can do only and only through authorized person. That is that. Okay, no any modification required. Perfect. Okay, so these 4 transaction, whatever you want, I think so. Nothing, no other one new transaction is left other than this 4 transaction. If you want to, either you want to receive the foreign exchange, or you want to make any payment of any foreign exchange, or you want to deal in the foreign exchange, or enter into financial transaction for the purpose of creation of any assets outside India, you can do that transactions only and only through authorized person. Remember, section 3 prescribes the restriction, that is not prohibited part. Now, general permission. The restriction is provided in this sense only. Restriction, relaxation in restriction. All the 3 restrictions mentioned under section 3 may be relaxed in the following manner. By making a provision to the effect, government may provide a general special permission of RBI, and then accordingly you can make such transactions without the AP. Now, general permission under 3A. 3A means deal. This one. The RBI has permitted any person to buy from any post office in accordance with any law and rules made thereunder for the time being in force any foreign exchange in the form of postal order, money order, Viraj bhai, you need to learn the charts again and again. You need to go through the charts again and again. Then I think so that provision will fix in your mind. This is a simple solution for the law. Go through, like for example, your exams were due in November, right? So you all can do what? You can just go through only 10 pages or 10 charts or 10 notes, whatever you have study material. So you can just go through the 10 pages per day basis, right? Till your November examination. I think so. Then the problem of grasping will not arise in law. 10 pages go through in the morning part and again revise before sleeping part, right? General permission under 3B, 3C, 3D, the prohibition imposed by clause B, C, D of section shall not apply to any transaction entered into Indian rupees by a person who is a citizen of India, Nepal, Bhutan, resident in India, Nepal, Bhutan. That is allowed because in Nepal and Bhutan, Indian currency also prevail. A branch situated in Nepal, Bhutan of any business carried on by a company or a corporation incorporated in India, Nepal, Bhutan, a branch situated in Nepal, Bhutan of any business carried on any partnership firm, means law has prescribed the type of business what you are doing Nepal, Bhutan, that is allowed to do any transaction, right? So this is your section 3, and in the study material part, this is your theory part of section 3. Yeah, this. Right? General part, special part. Consider the for example. Now, example. A person resident in India, a person resident outside India comes to India, would like to sell you US dollar 1,000 to his friend who is a resident in India. The friend offers him a rate better than the banks. This cannot be done. You are not supposed to deal in foreign exchange. This is example of first A point. B point. A PROI has an insurance policy in India, LIC. He requests his brother in India to pay the insurance premium. This will amount to payment for the credit of non-resident. This is not permitted. Example pertaining to clause B, clause C. A foreign tourist comes to India. He takes food at the restaurant. He would like to pay US dollar 20 in cash to the restaurant. Practical is different, theoretical is different. The restaurant cannot accept cash, and it will be a receipt other than to the authorized person. The restaurant will have to take a money changer license to accept the foreign currency. Obviously, he will take the dollar in the practical part. Okay, and D point, transaction covered by this subsection are known as a Hawala transaction. An Indian resident gives 70,000 in cash to Indian dealer. For this transaction, the brother in Dubai will get USD 1,000. Dubai dealer, this is a Hawala transaction, that is strictly. The two dealer may settle the transaction later. However, the transaction is not permitted, right? I think so. Now it is clear. Section 3 concept. Section 3 whole concept is clear. Now there is one more topic, like RBI provided general permission for payment by a person resident in India. RBI has issued a general permission permitting any person resident in India to make payment in Indian rupees in following cases. That is permissible. First, a person, Mr. John, comes to India from America. Now Mr. Ram wants to spend some amount for the purpose of hospitality, so he can do this. Expenses of hospitality of a person visiting India, payment towards meeting expenses on account of boarding, lodging, services related thereto, travel to or from within India of a PROI who is on visit to India, that is permitted. There is no issue. Purchase of gold and silver, payment to a PROI by means of cross-check or draft as consideration for purchase of gold and silver in any form imported by such person, accordance with the condition imposed under any order. So that is also permitted. Payment to guarantor. A PRII being the principal debtor may make a payment to a person resident outside India being a guarantor, such payment being made by way of reimbursement of the payment made to the resident creditor by non-resident guarantor under the guarantee furnished. So this is a guarantee contract. You need to pay the amount to later on that person, or payment to non-full-time director, the person who is a non-resident. A company in or resident in India may make a payment in rupees to a non-full-time director who is a resident in India and who came to India for visit, for company work, for attending any meeting, right? In that case, we are going to pay the sitting fees, commission, remuneration, travel expenses. That all are allowed subject to the consent followed by the memorandum of association. Right? So this is the general permission part. Receipt by a person resident in India, general permission. I think so that concept is not covered in your study material part. The Reserve Bank of India has issued a general permission permitting any person to receive. This is the point for making a payment. And this is the point for receiving this amount. Any person may receive any payment made in rupees by order on behalf of the PROI during his stay in India out of the rupee fund provided to him by sale of foreign exchange to an authorized dealer, authorized person. This is allowed, right? Any person can pay any amount. What is the guarantee thing? Guarantee thing means, like suppose, for example, I provided a guarantee in favor of you, like, and I paid the amount to the creditor part. Now I can recover that amount from a person resident outside India. The person who is providing a PRII being the principal debtor may make a payment to a PROI being a guarantor for executing a transaction. That is allowed. I think so, right? Any person may receive any payment. Law has clearly specified you can receive by this check drawn on a bank situated outside India or a bank draft traveler check issued outside India, subject to the condition that foreign exchange so received shall be offered for sale to authorized dealer or a money changer within 7 days of receipt. Any person may receive any payment made in foreign currency note directly from out of India, subject to the condition that foreign exchange so received shall be offered for sale to AP within 7 days. Within 7 days, you need to sell that foreign exchange to the AP. Any person may receive any payment by means of postal order, postal money order issued by the post office outside India, right? So this is your basic chart. Generally, examiner will not ask a question. That's why institute has not covered this concept in your study material. Okay. So this is your this part, section 4, holding of foreign exchange. Okay, so next section is current account transaction. Section 5, next concept is current account transaction, right? Section 5. Okay, so we will do one thing. It's 7:18 in the clock. So we will take a break till 12 minutes or 10 minutes, we can say. So we will resume by 7:30, right? Then we will start the current account transaction. Current account transaction is the second most important topic after PRII. Okay. So let's resume later on. Yes. Okay, fine. So let's start again the current account transaction. And the Kaushiki, you have a doubt. Please tell me the background of the FEMA. Why there is a need to bring FEMA? Why certain transactions are restricted? When we are dealing with the foreign exchange, we need a regulation, right? If a person is doing certain transaction with the outside India, then we need certain regulation. For this FEMA is introduced. Now, who is the boss of this FEMA? Reserve Bank of India is the boss of the FEMA, because they issue regulations. They issue regulations, and the person doing the transaction, they need to comply with the transactions with respect to FEMA approvals part. And they have decided, and they have divided also the transactions into current account transactions, capital account transactions, which all transactions are prohibited. For example, there's a concept called FDI, foreign direct investment, and that foreign direct investment is strictly prohibited in agriculture sector. So to regulate these type of sectors, there is a need of FEMA. To avoid the illegal transaction, there is a need of FEMA, right? So this is the basic reason for introduction of this FEMA. And what happened before 1999, there was a regulation called FERA. That FERA regulates, like they are not going to issue you foreign exchange. But after the introduction of 1991 new economic policy, LPG, liberalization, privatization, globalization, all the country opened their doors for doing the cross-border transaction. So that's why they have removed the FERA and they have introduced the FEMA part. Okay, so can we start the current account transaction section 5? Current account transaction section 5. Okay. So current account transaction section 5 deals with the current account transaction. This is the most important section, and we already gone through the definition of current account transaction, along with the 4 types of transactions are covered under this current account transaction. So definition is already discussed. Okay. So what is current account transaction? Section 5 talks about dealing in current account transaction means we are withdrawing foreign exchange from, first point, authorized person, or opening of letter of credit. All these current capital, no, all these current capital are not prohibited. Wait for next half an hour. The restriction, which transactions are prohibited and which transactions are allowed up to certain percent with approval of RBI, with approval of central government. Okay, so let's start. First is authorized person. You can withdraw the foreign exchange from authorized person. You can opening of letter of credit or use of international credit card, debit card, ATM card, which has the effect of creating a foreign exchange liability that will fall under the definition of current account transaction. So for this, now this is important for you, Kaushiki, right? Government has framed rules and divided into 3 categories. First rule, they have provided in Schedule 1 certain transactions which are prohibited, extremely prohibited. Second, certain transactions are mentioned which you can undertake with the approval of central government. And third type of transaction, in fact, this is the most important type of transaction, which can be undertaken after limit with the approval of Reserve Bank of India. Right? So these are the 3 schedules as prescribed under the current account transaction section 5. I think so. Can we go with these rules? Right? First schedule. Now this is important part. Rules on current account transaction. So there are 3 types of rules. Transaction for which withdrawal of foreign exchange is prohibited. Transaction for which foreign exchange can be drawn subject to the prior approval of central government. Transaction for which foreign exchange can be drawn subject to the prior approval of RBI. Transaction for which foreign exchange is prohibited. So these are the transactions, right? Prohibited transactions. First point. If I want to travel to Nepal and Bhutan, And for this, I am demanding rupees 2,000 from RBI. They will strictly prohibit it, like payment for travel to Nepal and Bhutan. They will not allow you foreign exchange. And if I'm entering into any transaction with a person resident in Nepal and Bhutan, you need not do any foreign exchange will not be allowed for these two transactions, right? Because you can enter these transactions in Indian rupees also. Third point. Remittance out of from lottery winning, from racing, riding, or any other hobby, and you won through this, you earned some amount from this lottery winning, racing, horse riding, right, or any other hobby, and you want to remit this 10,000 rupees in dollar terms to your family, to your friend who is residing in America, that is strictly prohibited. Government is clear, you earn from India, you need to spend in India only. We are not going to allow you foreign exchange for this purpose. Fourth point. Remittance for, if you want to purchase any lottery tickets, you want to purchase any band magazine, you want to purchase any ticket of football, pools, sweepstakes, these are the games, right? So you want to purchase a ticket for these games, law has clearly specified we don't have enough foreign exchange so that we can offer you foreign exchange for these rubbish methods, right? So these are the 4 points for which that is strictly prohibited. You're not supposed to get any foreign exchange for entering this transaction. Fifth point is important. Payment of commission, you need to make a payment of commission on export under rupee state credit route scheme. Accept payment of commission up to 10% of the invoice value on export of tea and tobacco, that is permitted, otherwise it is strictly prohibited. It means, Namrata, good evening. You are so late. Okay. But you then too, you are on time because this is a current account transaction, important one. Okay. So fifth point is important. Now, what is rupee state credit route scheme? So this is what in the later years, there is an agreement between India and Russia. There's an agreement between, what is the rupee state credit route? So there's an agreement between India and Russia. Under this agreement, India has agreed, like we will export what is, so I'm just explaining the point 5 only, Kaushiki, right? So what is rupee state credit route? So there's an agreement between the two countries, India and Russia. Under this agreement, India is ready to supply certain exports to Russia on a compulsory basis, right? So for this, law has prescribed, if you are exporting such thing due to this agreement, we are not allowed to pay you any commission. But we will allow you payment of commission if you are exporting tea and tobacco, and that commission up to the 10% of the invoice value, not more than that, right? Not more than that commission will be allowed. Means commission can be allowed for the export of tea and tobacco. And what is the rate of commission? 10% of the invoice value of export. Oh, Namrata, yes, I can recall. 6th point. Payment of commission on export made towards equity investment in joint venture. You have your company, right? And you are making the equity investment. Payment of commission on export means towards the equity investment in joint ventures, wholly owned subsidiaries abroad of Indian companies. So law has clearly specified, like you cannot get the foreign exchange for this purpose, right? You want to pay the amount foreign exchange for the purpose of dividend. Your company is declared some dividend, and on your company dividend balancing is applicable. Dividend balancing means, say for example, Reliance is getting a dividend of 5 lakh from outside India, and they needs to pay 7 lakhs to outsider India investors. So this is a dividend balancing, like you are getting something from outside India in respect of dividend part, and you need to pay some dividend to outsider investors outside India. So you need to adjust this amount. So this is the dividend balancing. Payment related to callback services of telephone, right? Sharmaji made a call, or for example, some outside person, Miss Nancy made a call to Sharmaji, and they talk for approximately 2 to 3 hours per day basis. And the Sharmaji is need to pay the bill. So government is clearly specified, like callback services, we don't have such much foreign exchange to pay you, right? Remittance of interest income on fund held in NRSE account, non-resident special route transaction is specifically prohibited, is the most important point. So this is the most important point. If you have any doubt in any of the point, let me know. I can again explain any of the point. So this is your current account transaction, first schedule under which foreign exchange is extremely prohibited. Right? Any doubt in any of the point? Or we can proceed towards the next schedule part. Okay. So next is certain transaction you need to enter, but you need to take the approval of central government, right? Rule 4, read with the schedule 2, prior approval of central government shall be required for drawal of foreign exchange, right? First point, remittance for freight of vessel chartered by any public sector undertaking. Public sector undertaking take a vessel on a rent. For paying the rent, they need foreign exchange. You need to take the approval of central government. Accordingly, you can pay. No issue at all. First point. Second, multimodal transport operator making, there is a space problem, I think so. This is multimodal transport operator. Transport operator making remittance to their agents abroad. Right? Multimodal transport operator in any other country, in 4 to 5 countries, right? So in that case, there is a concept of multimodal transport operator making remittance to their agent abroad. You need to take the approval of central government. Remittance of contention detention charges exceeding the rate prescribed by the DGFT, Director General of Shipping, right? You need to pay the charges which is provided by the Director General. So law has clearly specified, you want to pay more charges, you can take approval of central government. Advertisement in foreign print media by the state government or public sector undertaking exceeding $10,000. Up to 10,000, you need not to take any approval. Kaushiki's speed is more. Okay. So first point is remittance of freight of vessel chartered by PSU. There is no such problem. Second is multimodal transport operator making remittance to the agent abroad. Third point is, till third point, first, second, third point, is there any problem? In schedule 2, central government approval, first, second, third point, is there any problem? Schedule 2, first, second, third point, is there any problem? Okay, fourth point. You want to make any, you means central state government or any public sector undertaking makes any advertisement in any foreign print media. So law has clearly specified we are allowing a blanket limit of $10,000 for the purpose of advertisement, right? Now, if you want to make more investment, for this, you need to take the approval of central government in point number 4. But No restriction if payment is made for tourism, foreign investment, international bidding, and the promotion of this, right? So first point it talks about the remittance of freight vessel chartered by the PSU. PSU has taken any vessel. Vessel means ship, and they need to pay the freight for this ship. For this, you need to take the approval of central government. Second, same applies to transport company also. Third stands for you need to pay the container detention charges more than the rate fixed by the Director General of Shipping. So you, in that case, you can make the payment. Okay. Fourth point. Fifth point. Payment of import through ocean transport by government department or a PSU on a CIF basis other than FOB and FAS basis. So law has clearly specified. In that case, what you need to pay? You can take the approval of central government. Remittance of prize money, sponsorship of sports activity abroad exceeding $1 lakh. Right? That is also allowed. Exceeding $1 lakh. Exception है. No restriction if payment is made by international level sports body. Means there is no restriction. Like you are not restricted to $1 lakh. You can pay more also. Point number 6 is also clear. I think so. Point number 7. Remittance of hiring charges of transponders by TV channels or internet service provider. So they need to provide the charges to the outside news broadcasting agencies. They can pay the payment unless approval taken from the central government. Cultural tours, approval from central government. Remittance for membership of P&I club, protection and indemnity insurance club. So you need to make any membership payment of this P&I club. So in that case, you need to take the approval of central government. However, exception. No approval of central government is required where you are making payment from RSC account or EEFC account, exchange earner foreign currency account, EEFC, except for remittance for membership of P&I club. So this is your second schedule. Let me know, is there any problem in any of the point? In any of your point? Any problem in any of the points as mentioned in schedule 2? Move towards this part. Okay. So this is your section 5. This is your current account definition. Okay. So these are the examples. Okay. So this is your schedule part. Transactions for which foreign exchange is prohibited. First is remittance out. These all are prohibited. Second is cultural tour, Ministry of HRD. Advertisement in foreign print media up to $10,000. That is allowed. Right? Remittance of freight vessel chartered by PSU, department approval. Import ocean transport payment, department approval. Multimodal, department approval. TV hiring charges under sub Ministry of Information Broadcasting approval. So this is the department approval. Department approval means central government approval. And third, this is the most important point, which talks about the RBI approval part. Now, so can we start this third part, transaction permissible with approval of Reserve Bank of India? So can we start this one? Okay. So schedule 3rd talks about that if you want to make any payment, in that case, you need to take the approval of Reserve Bank of India. Rule 5 read with Schedule 3 makes the following provision in this regard. Now, that whole concept between divided between two parts. First is facility for individuals, and second is facility for other than individual, means corporates. So first we will talk about the individual part. Right now, what they have provided certain type of expenses list. Like if you want to make investment, if you want to make any kind of expenditure for these purposes as specified in 1 to 9. For example, if you want to visit to any country except Nepal and Bhutan, you can go, no issue. We will allow you 2.5 lakhs dollar, right? You want to gift or you want to donate, we will allow you in exchange of rupees USD maximum 2.5 lakhs dollar. Going abroad for employment, you can take 2.5 lakh dollars. Immigration means you are shifting from India to other country, that is also allowed. Maintenance of close relative abroad allowed. Travel for business or attending a conference, specialized training, fee meeting expenses, that is also allowed. Expenses in connection with medical treatment abroad allowed. Studies abroad allowed. Any other current account transaction, if it is permissible, that is also allowed. Now, remember, for all these transaction, limit is fixed 2.5 lakh dollar. For each transaction, limit is not 2.5 lakhs. It is overall transaction limit is available is 2.5 lakh dollars. I think so. This is clear, right? So 2.5 lakh, you can entirely spend on some private visit to any country except Nepal and Bhutan, no issue at all. But overall limit available is 2.5 lakh dollars for all these transactions. Either you can spend single transaction, you can spend in aggregate. Law does not have any problem. They have provided a blanket limit of 2.5 lakh dollars. However, for the purpose mentioned in point number 478, for country of immigration, 2.5 lakh per year per annum. Yes. Right? 7, medical treatment. 8. Now, for the point 4th, that is immigration. For the point number 7, medical treatment abroad, and for the purpose of study abroad, law has clearly specified because these are not fixed type of expenditure. However, for the purpose of mention, any individual may draw the foreign exchange exceeding USD 2.5 lakh if it is so required by the country of immigration. Then we will offer. Medical institute offering the medical treatment or the universities respectively. For example, they are demanding for the universities, they are demanding 3 lakh dollars, right? So law will allow this type of amount also. Kaushiki, your doubt is clear, right? I think now your doubt is clear. 2.5 lakh per person per year limit. Perfect. Okay. Now, if an individual remits any amount under the LRS, and now this 2.5 lakh limit is known as a LRS. We can call this LRS scheme limit, liberalized remittance scheme in a financial year. If an individual remit any amount under the LRS in a financial year, then the applicable limit for such individual would be reduced from 2.5 lakhs by the amount or remitted. A person who is a resident but not permanently resident in India. Suppose, for example, in the May month, I used approximately $60,000. So the LRS limit of 2.5 lakh will get reduced by $60,000. Now, rest is my limit, 1.9. A person who is a resident but not a permanently resident in India and is a citizen of foreign state other than Pakistan, or is a citizen of India who is in deputation to the office or branch of foreign company or subsidiary or joint venture. India of such foreign company may make remittance up to his net salary. We can offer or remit not more than his net salary after deduction of TDS taxes, contribution to PF, other deduction. Explanation: for the purpose of this item, a person resident in India on account of his employment or deputation of any specific duration, irrespective of length or for a specific job, duration which does not exceed 3 years, is a resident but not permanently resident. If a person, you can call as a person resident in India but not permanently resident in India. For this purpose, the limit is 3 years or more. A person other than the individual may also draw foreign exchange. Same rule will apply, same limit will apply, that is $2.5 lakh. No approval is required if you are withdrawing that amount from your RFC account, resident foreign currency account. Now, this is available for corporate other than individual. That limit is available. Remember, examiner can ask a simple 1 point picker and he can ask you like which authority is going to approve the transaction, what is the limit of this transaction. So you need to remember whether the transaction falls under schedule 1, 2, 3 and what is the limit. Now, first point, donation exceeding 1% of their foreign exchange earning during the 3 financial year means your company is earning foreign exchange in the previous 3 financial year. You need to take the total of this, and what you are doing. So you need to take a 1% of this amount, right? Or USD 50 lakh, whichever is less, and you are donating for what purpose? First is creation of chairs in a reputed educational institute, right? We are offering the donation to create a chair in the educational institute, donation type, trustee concept. Contribution to fund not being an investment fund promoted by educational institute, and contribution to a technical institution, body or association in the field of activity of donor company. So law has clearly specified that you cannot make an amount investment rather than donation 1% of your 3 years earning or USD 50 lakh, whichever is lower. Okay, Kaushiki, you have a doubt, net salary, right? So person can withdraw up to his net salary, excluding the taxes part, if that person belongs to a citizen of foreign state other than Pakistan, right? So law has prescribed the limit for these type of persons, right? So limit is for them only. Net salary, they can withdraw, they can remit up to not more than their net salary. And net salary is after deduction of TDS, contribution to PF and all. Second point, you want to pay any commission to agent abroad for sale of residential flat or commercial plot in India exceeding 25,000 or 5% of inward remittance, whichever is more. So law has clearly specified if you want to make payment more of this amount, in that case you need to take to approval of RBI up to the limit of 25,000 USD or 5% of the inward remittance. That is okay, no issues at all. Third point, remittance exceeding USD 1 crore per project for any consultancy services in respect of infrastructure project, or USD 10 lakhs per project for other consultancy services procured from outside India. If you want to make any payment more than this amount, FEMA will apply. Remittance exceeding 5% of investment brought into India or USD 1 lakh, whichever is higher, by an entity in India by way of reimbursement of pre-incorporation expenses, that is also allowed. 5% remittance exceeding 5% of investment brought into India, or 1 lakh, whichever is higher. So you are going to pay that amount. So that is allowed. No approval of RBI if amount is withdrawn from RFC account. I think so. This is clear. See, these are the points. These are the points, all points up to the limit of 2.5 lakhs. For universities, immigration, point number 478, that is also clear, right? 2.5 lakh, other than the person, this is, he can make remittance up to his net salary. The person who is resident but not permanently resident in India and the citizen of this, then that net salary allowed. Facility for person other than individual, this is the limit. These are the points, right? So I think so this is clear. Now, let me know, is there any doubt in the current account transactions in all these schedules? Is there any doubt in current account transaction? Is there any doubt in current account transactions in any of the schedules? Let me know. In any single point, if you have any doubt, please. Is there any doubt? No doubt? Can we move forward for capital account transactions? Everything is clear till current account transactions. Any other definition? Applicability part, PRI concept, current account transaction, anything else? No, if examiner can ask, what they will do, they can ask a question from, for example, this first point. Then you need to mention what they will do. They will ask a simple 6 marks or 8 marks question. They will cover from all the schedule 4 to 5 points. Under this point, you need to mention only that relevant, that transaction is still prohibited as per Schedule 1, Schedule 2 central government approval required, Schedule 3 RBI approval required. Do we need to remember all these transactions? Yes, you need to remember all the transactions. Current account transactions, very important. This is the most important. This is the second topic, most important as far as FEMA is concerned. Next question, please. Okay, all clear. Perfect. Okay, now the concept called capital account transaction, right? Definition is already discussed. What is capital account transaction? Now, capital account is also split under the different schedules. Schedule 1, and this is a simple one. Capital account transaction is basically split into following categories. Schedule 1, Regulation 3, transaction made by PRII, and this is for PROI. Okay, let's start. So, what transactions as entered by PRII, they are covered here. First point is investment by PRII in foreign securities. I already told you in FEMA, each transaction is covered 2 sides. First is India, second is outside India. Person belongs to India, securities belong to outside India, then only the FEMA will apply. So this is the first one. Foreign currency loan raised in India or abroad by a PRII, then also FEMA will apply. transfer of immovable property outside India by a PRA. Property is situated outside India, person situated in India. FEMA will apply. Guarantee issued by PRII in favor of PROI. One person is there, one person in India. Export, import, holding of currency, currency note, loan overdraft by a PRII from PROI. Maintenance of foreign currency accounts in India and outside India by a PRII. Taking out of insurance policy by a PRII from an insurance company outside India. Loan overdraft by a PRII to a PROI. Remittance outside India of a capital assets of PRII. So law has clearly specified these types of transaction as entered by PRII will be treated as a capital account transaction. If you can go through all the transactions, these all transactions will hit your balance sheet part. They will not come in your P&L account. I think so. This transaction is clear, right? This transaction is clear. This transaction is clear or not? This is a capital account transaction, first part. First, scheduled transactions permitted by transaction made by PRII. Now, transactions made by PROI is first point. Investment in India by a person resident outside India. Issue of security by a body corporate or an entity in India or investment by a PROI. This is reverse. Right? Investment in India by a person resident outside India. Issue of security by a body corporate entity in India. Investment किसने किया है? PROI ने. Second, investment by way of contribution by a PROI to the partnership firm capital or AOP of the firm. Acquisition, trade of immovable property in India by whom? PROI. Guaranteed, simple, reverse of this, right? Reverse of this. Deposit, loan. There is a loan, there is a deposits, right? Foreign currency, what they are saying? Guarantee by a PROI in favor on behalf of the PRII. Import, export of currency into or from India by a PROI. Deposit between PRII, PROI. Foreign currency account in India by a PROI. All transactions are reverse, right? Remittance outside India of capital assets in India of a PROI. So these are the transactions which are done by a person resident in India in Schedule 1 and Schedule 2, person resident outside India. So is there any doubt? Is there any doubt? Then we will go to theory part also. Okay, certain transactions are, there are no restriction, transaction with no restriction, and these are important. First point is, for amortization of loan, for payment of loan installment, your company has obtained a foreign currency loan, you need to make a installment, you need to make a EMI. So you can make a EMI, no issues at all. For depreciation of direct investment in the ordinary course of business, that is also allowed. Now, what is the example of this one? Suppose, for example, now again read, right? For depreciation of direct investment in ordinary course of business means you made any direct investment outside India and that investment reduces. For this to you need to contribute the amount which is depreciated in the ordinary course of business. So for this, there is no restriction for foreign exchange. Basically, I think so that point will respect to the derivative contract. Because in derivative contract, there is a maintenance margin, right? maintenance margin you need to pay to the broker. When there is a shortfall, he will call a margin call. Now, prohibited transaction. Regulation. Sir, Government of India gave loan of 100. Sir, Government of India gave loan of 100 million. Will this transaction covered under FEMA? Yes, that will cover under the FEMA. Prohibited transaction. On certain transactions, the RBI imposes prohibition. No person shall undertake or sell or draw foreign exchange to or from an authorized person for a capital account transaction, provided that a resident individual may draw from an authorized person foreign exchange not exceeding USD 2.5 lakh per financial year. This is limit is perfect. No part of foreign exchange of USD 2.5 lakh shall be used for remittance directly, indirectly to countries notified by FATF, Pakistan, right? So you are not going to deal with this. Shall be used. Means 2.5 lakh shall not be used for these non-cooperative countries which are notified by FATF, Financial Action Task Force, money laundering. Next is the PROI is prohibited from making investment in India in any company, partnership firm, proprietorship concern, an entity, whether incorporated or not, which is engaged or proposed to engage in the business of chit fund, Nidhi company, agriculture, plantation activity, real estate business or construction of farmhouse, in trading in TDR, trading transfer development right. So that is also prohibited. Certain transactions cannot be done by any person. That's all about your capital account transaction. Now, theory part. Okay, so theory part is capital account. This is import export. We will go through import export a little bit later. This is a topic which we are skipping, that is called import export, right? Sorry, that is import. Now, capital account transaction. So this is your capital account transaction. This is your definition of capital account transaction. Okay. 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 And these are your schedules with respect to capital account transaction. Capital account transaction section 6 deals with this. This is your schedule. Transactions which are permissible in respect of person resident in India and outside India. So these are the transactions. Permissible transaction. This is your schedule 1. Import, export of holding loan, overdraft, maintenance of transfer of foreign currency loan, investment. We covered all the points. This is the second schedule, person resident outside India, body corporate entity investment outside India, right? Acquisition, transaction with no restriction, amortization of loan, EMI payment for deposition or direct investment in the ordinary course of business, and prohibited transactions. Right? So this is a business of chit fund business, Nidhi company, plantation, agriculture, real estate, TDR, trading in TDR, that all are prohibited activity. So this is your what? Capital account transaction. I think so this is clear. So till this chart, everything is clear. Till this chart, everything is clear. Capital account transaction, current account transaction, PRII, definitions of certain important points. Everything is clear. Everything is clear. Or is there any doubt? Okay. So this is your capital account transaction. Now there is a section 10, right? There is a section 10. Section 10 talks about the authorized person. Now, who is the authorized person? Definition we already discussed. What are the duties of authorized person? So duties of authorized person, first, to comply with the RBI directions. Whatever direction is issued by RBI, you need to comply. Second, not to engage in any unlawful transaction. You are not supposed to engage in any unlawful transaction. Third, to ensure compliance with the Act rules. Or, sir, what is the meaning of sentence transaction is covered under FEMA? It means that transaction which you are talking about, that transaction you need to take the approval of respective authority, whether it's a central government or department approval or RBI. Right, Viraj? Okay. Next is to report RBI in case of any contravention takes place. So these are the 4 points with respect to duties of authorized person. Revocation of authorization. In following cases, RBI can revoke in public interest. The authority which is provided to the authorized person, RBI has a power to revoke that approval, right, in public interest only. Such authorized person fails to comply the conditions. Which authorized person we are going to revoke the authority? So the person who fails to comply the condition, or they are making contravention of the provision of this act, provided whenever there is a revocation applies, reasonable opportunity of being heard is already required, always required. Power of RBI. RBI can issue direction for the compliance of Act rules. What is this? Kaushal, how to verify if one is authorized or not? You can go to the RBI website. There is a list of authorized person, right? In fact, if you can visit a big branch of any bank, there is a different counter, there is a different section that mention is the authorized person, right? Money changer, offshore banking in it. They have a license number. Calling the information, they can, RBI has a power, they can call the information. Whatever they are doing, opportunity of being heard, penalty for contravention. When can be penalty be levied? If any person contravene the directions of RBI, or if you fail to file any return. This all belongs to the cases of penalty of contravention. Now, what is the penalty amount? 10,000 rupees. And if the contravention is continued, 2,000 rupees per day plus further penalty will be imposed. This is the concept of authorization, right? Authorized person, section number 10. Next, power to RBI to inspect authorized person. Power to RBI to inspect authorized person, section is 12. RBI can inspect by any officer specially authorized business of any AP for, first point, correctness of any statement information furnished to RBI. Second, to obtain any information if authorized person has failed to furnish. Third, to check whether the AP is compliance the Act rules, regulations or not. Duty to produce books, furnish information, to produce any officer, inspector, such books, accounts, other document. Duty to acquire foreign exchange. If a person acquired foreign exchange for any specified purpose, he shall be deemed to have committed the contravention. And this is going to be important, that when we will treat that person has committed a contravention, first point, that person has not used such foreign exchange for the purpose for which he requested the same. Suppose, for example, I obtained the foreign exchange for the purpose of medical treatment abroad, and I have used in the casino of Africa, right? So this is totally prohibited. Dubai does not surrender to authorized person within the specified period. you have left with some foreign exchange, but you have not surrendered to the authorized person, or uses the foreign exchange for the purpose specified in Schedule 1 means prohibited purpose. So that calls with the purpose of contravention. So these are the two charts with respect to authorized person. So is there any doubt? Let me. Is there any doubt? Section 11, section 10, 12. Is there any doubt? Okay, so this is your ECB part. We will see ECB later. This is your ECB part till 12 to 14 pages. We will take ECP and ODI later on, right? ODI is a new concept. Okay, authorized person. Section 10. Clear, sir? Okay, perfect. So section 10, offshore banking unit, SEZ established. Okay, appointment of authorized person. RBI has a power to appoint authorized person. Appointment on application, so they can deal in foreign exchange, foreign security. AP shall comply with the directions of RBI duties. AP may ask for declaration information for carrying out any transaction on behalf of any person. In case of contravention, non-compliance of any requirement, these are the three important points you need to remember always. Revocation of authorization. RBI can also revoke in the public interest. And there is a section 11, and there is a contravention part, and RBI has a power to inspect the authorized person, verification of the correctness, obtaining any information of particular securing compliance with the act. Right? So I think so both the charts of that covers all concepts with respect to authorized person. I think so that is clear, right? Authorized person, section 10. Is there any doubt? Let me know. Is there any doubt till what we have done? We completed the definition. In the first chart, we talk about the applicability part, right? In second chart, definition. Third chart, definition. Fourth chart, definition. And the important definition is authorized person, capital account transaction, current account transaction, PRII. Right? Then we started PRII concept, the one of the examiner favorite question from this concept. Then current account transaction, then capital account transaction, right? Then authorized person, concept of authorized person. Okay, perfect. Okay, so we will move towards the export of goods and services. Section 7 talks about, remember one thing, section 6, section 5 deal with the current account transactions, section 6 deal with capital account transaction, and section 7 deals with export of goods and services. Now, what is export? So law has clearly specified like what is export. So export means taking out of India to a place outside India of any goods. Yeah, you are providing your services from India to any person outside India. That is export. Services means Service of any description available to users, for example, banking, financing, insurance, transport, etc. RBI right over the exporter and export proceeds, right? RBI has a right. Furnishing of declaration by exporter. You need to provide the correct particulars if full export value not ascertained at the time. Suppose, for example, I am exporting something. At the time of export, I don't know what foreign exchange I'm going to receive. So law has clearly specified ascertain at the time, exporter should specify expected foreign exchange you will receive. You're not supposed to mention the exact amount, but some points you can questions or example of previous done topics after PRI. We will do, yes, we will do later on. No issues at all. For capital account, for current account transaction, that is more important, right? Furnishing of information as required by the RBI. Declaration by an export of services shall give to RBI payment made for such services. It means whatever amount you are going to receive by exporting that goods, you need to provide the declaration to the RBI. With respect to services, for example, in India, you receive an order from outside India for the creation of some mobile app. You hired an engineer in India. Now, for the service sector, you don't know what is the value of the service, right? So law has clearly specified, like you paid 20,000 to the engineer in India for the purpose of creation of this application. So you need to mention that. So we are confident that you will receive more than 20,000 from outside India. Issue of declaration by RBI. RBI shall issue direction. Full export value shall be received without undue delay. Right? Realization and repatriation of foreign exchange, that is export proceeds. Exporter takes reasonable steps. Exporter needs to take all these steps to realize, to repatriate as per the regulations, refrain from doing, and you need not to do these types of things. What are these? First is you need not to do anything which delays in receipt of export proceeds or which reduces the export proceeds, right? So law has clearly specified like you are not supposed to do any such thing. Okay, so this is your first chart of export of goods and services. Is there any problem in understanding this chart? Export of goods and services. Is there any problem in section 7 first chart? We will do question of rest of the topics of FEMA later on only. Export of goods and services first chart. Is there any problem? Export of goods and services. Okay, perfect. Second. Now, requirement for making export. This is important point. A declaration, you need to provide a declaration. So a declaration shall be submitted by every exporter of goods and services, exporter of goods any place outside India, form of declaration. This is important. In declaration in form EDF shall be submitted in duplicate, means 2 copies to the Commissioner of Custom. And in case of software, there is a form called Softex. The declaration should be submitted, the document should be submitted within 21 days from the date of export. But this is important one. Government has provided some exemption from declaration as prescribed under Rule 4. Examiner can ask a simple question from any of these points. Right? First point. Or theory question also. Trade samples of goods publicity material supplied free of cost. As you are supplying for the purpose of promotion, there is no need for any declaration. Personal effects means your belongings of travelers, whether accompanied or unaccompanied baggage, if you can remember the custom part. Ship stores, customs, custom act, right? Transshipment cargo, goods supplied under the order of central government or of officer as may be appointed by central government in this behalf, military, naval, air force authority in India for carrying out the requirement of respective by way of gift of any goods accompanied by a declaration by exporter that they are not more than 5 lakh rupees in value, that is exempted. Not more than 5 lakh, that gift is exempted from declaration part. Aircraft, aircraft engines, spare parts for overhauling or repair abroad, subject to their re-import into India within 6 months from the date of export. In that case, you need not to provide any kind of declaration. Goods imported free of cost on re-export basis, that is also allowed. Replacement goods exported free of charge in accordance with the provision of foreign trade policy in force and for the time being. Goods sent outside India for testing subject to re-import into India. If you can check, the goods are subject to some construction, subject to some work. Defective goods sent outside India for repair, re-import provided. Goods are accompanied by a certificate from an authorized dealer in India that the export is for repair, and they will re-import that the export does not involve any transaction in foreign exchange. Export permitted by Reserve Bank of India on an application made to it subject to the condition or permission specified, right? So these are the exemption. Let me know if is there any doubt in any of the exemption as provided by from declaration. Is there any doubt in any of the exemption? Examiner can ask rupees 5 lakh value gift concept. You just need to read out these points again and again. Then they will fix in your mind. Minimum 4 to 5 times before the examination, right? Yes. Is there any problem in export of goods and services? Okay. Third chart. Just we have to remember all. Correct. Third chart. There is a concept of IEC number, import export code number. The IEC number shall be indicated on the copies of declaration form as submitted by exporter to the specified authority and shall be used. That IEC number shall be used for all the correspondence of the exporter with the authorized dealer or the Reserve Bank of India, authority to whom declaration is to be furnished, and the manner of dealing with the declaration. Declaration in form EDF, declaration in form soft text. It shall be submitted in duplicate to the Commissioner of Customs. He will verify the correctness of document and forward the original declaration to the nearest RBI. Now this is important, right? In the form EDF, right? In the form EDF, what you need to do? You need to submit in 2 copies to Commissioner of Customs. He will verify the correctness and accordingly forward the document with the original declaration to the nearest RBI officer. In case of soft text, 3 copies. Soft text means software. In respect of export of computer software, audio, video, television software, submitted in 3 copies to the designated officials of Ministry of Information Technology, Government of India, at the Software Technology Park of Free Trade Zone SEZ. After certifying all 3 copies of Softex form, the designated forward to the RBI. The duplicate copy को record में रख लेगा, right? Shall be retained by the designated official for record purpose only. The third copy, right? So IEC number needs to be mentioned and EDF form needs to be supplied to Commissioner of Custom. Softex form needs to be applied to particular Ministry of Information Technology. Fourth, period within which export value of goods, services, software to be realized. Specific is 9 months. Whatever you are exporting, you need to realize within 9 months from the date of export. However, in case of exporting to warehouse, duration is 15 months from the date of shipment. Accordingly, authorized dealer may extend the period of 9 months, 15 months if sufficient and reasonable costs. Where the export of goods and software services are to be made by the unit in SEZ, status holder exporter, EOU, units in EHTP, STP, BTP, as defined in FTP, the amount shall be received and repatriated to India within 9 months from the date of export. Remember thing, 9 months is the basic time, 15 months in case of export to warehouse, right? Or if you are providing where the export of goods and software services have been made by the units in SEZ, status holder exporter, EOU, EHTP, STP, BTP, as declared in FTP, then there is a case of 9 months. Transfer of document. An authorized dealer may accept for negotiation, for collection, shipping document including invoice, bill of exchange covering export, provided that before accepting such a document for negotiation or collection, the authorized dealer shall ensure that value declared shall not be less than the value shown over the document. This is the important point. The value, whatever amount is shown on the collection document, that amount should not be less than the value of this document. Right? This is the fourth chart of this goods and services. And fourth chart talk about the realization part, and it is 9 months only. Right? So this is your goods and services section 7. So this is your contravention part. Okay. Okay, this is your contravention part. This is your compounding, adjudication, appeal, miscellaneous. Okay, so this is your question part. Now, Printex Computer is a software Singapore-based company having several headquarters, units all over the world. This is the simplest one. It is a unit for manufacturing computer printers with its headquarters in Pune. It is a branch in Dubai, which is controlled by the headquarters in Pune. What will be the FEMA status? Pune branch and Dubai branch. Okay. So Pune branch, which is Pune branch headquarters. So this is PRII, right? And Dubai branch controlled by Pune branch. So that is again PRII, right? I think so. Question number first is very simple. Question number first is very simple. Question number first is very simple. Is there any doubt in question number 1? Now, question number 2 that deals with the current account transaction part. Mr. Sen, an Indian, yes, both are PRI. Mr. Sen, an Indian national, desires to obtain foreign exchange for the following purpose. First, Remittance of US dollar 50,000 out of winning on a lottery ticket. Whether this is allowed, or not allowed. Whether this is allowed or not allowed, remittance of US dollar 50,000. First is correct. 2-1 is prohibited. US dollar 1 lakh for sending a cultural troop on a tour of USA. And that cultural troop will fall under which schedule? Cultural troop will fall under which schedule? That will fall under the central government. Schedule number 2, schedule 2nd. Now this is allowed. Second part, cultural troop on a tour of USA, that is allowed as per schedule 2. Central government approval is required. I think so. Now this is clear. Right? So question number 2nd is also clear. Question number 2nd is also clear. Okay. So question number 3rd. State which kind of approval is required for the following transaction under the FEMA. X, a film star wants to perform along with his associates in New York on the occasion of Diwali. For Indian residing at New York, foreign exchange drawal to the extent of US dollar 20,000 is required for this purpose. Again, cultural tour. Cultural trip means you are going outside India for the purpose of showing your Indian what we can say Indian culture, right? For this, you are performing some dance from some South Indian dance you are going to perform in America. So that is promotion of cultural trip. Okay, again central government approval. The second point, second. R wants to get it heart surgery done at United Kingdom. Up to what limit foreign exchange can be drawn by him? What are the approval required? What are the approval required, right? In 3rd B, R wants to get its heart surgery done at United Kingdom. Up to what limit foreign exchange can be drawn by him, and what are the approvals required? Perfect. $2.5 lakh, subject to their estimates of the foreign doctor, whichever is higher. Till that, approval is not required. Right? Suppose the limit fixed by the doctor estimate is $3 lakh, then you can withdraw. Then you can take the foreign exchange up to 3 lakh rupees without taking the RBI approval. Referring to the provision of FEMA, examine whether Mr. V, an exporter, is bound to make declaration of gift of jewelry valued rupees 20,000 exported from India to United Kingdom. No. Yes, perfect, Kaushik. Question number 4. No declaration is required. Section 7. Exempted hai till 5 lakh rupees. Okay. Question number 5. Referring to the provision of FEMA 1999, state the kind of approval required for the following transaction. M required US dollar 5,000 for remittance toward hiring charges of transponder. Schedule 2nd, you need to take the approval of central government. I think so. You can recall this. P requires US $2,000 for payment related to callback services. इश्क लड़ाने के लिए पैसा required. P requires US dollar 2,000. Is it allowed? 5-2. What is the answer? Five two, 5-1 is clear, right? Schedule 2, central government approval. 5-2. 5.2. So 5.2, that is first schedule and that is prohibited, right? That is not allowed. Perfect. 5.2, no, prohibited. Question number 6, okay, that is Suresh. Suresh resided in India during the financial year 13-14. He left India on 15th July 2014 for Switzerland for pursuing higher studies in biotechnology for 2 years. कोई दिक्कत नहीं. What would be the residential status for the 14-15? 14-15, he is a person resident in India. 15-16, he is a person resident outside India. Mr. Suresh require every year USD 25,000 towards the tuition fees, 30,000 towards the incidental stay expenses for, yes, it is allowed, $2.5 lakh LRS, third schedule, that is allowed, facility for individual. Right? I think so. Sixth question is also clear. For the 14-15, he is a PRII. For the 15-16, he is a PROI. This type of questions examiner can ask. Question number 6. Question number 6. I think so. Question number 6 is also clear, right? 14-15, he is a PRII, and 15-16, he is a PROI. Question number 7. Got it. Perfect. Question number 7 first. Mr. P has won a big lottery and wants to remit $20,000 out of his winning to his son, who is in a USA. Advise whether such a remittance is possible under the FEMA 1999. Is it possible or not possible? No, not possible. 7-1, no. Perfect. Okay. 7-2. Mr. Z is unwell and would like to have a kidney transplant done in USA. He would like to know the formalities required and the amount that can be drawn as a foreign exchange. Okay. You need to comply schedule 3, right? 2.5 lakhs or doctor estimate, whichever is higher. Up to that amount, it is allowed. And these are your questions. I think so. We cover full this part, right? With the questions also. Current account questions along with the PRII question. Examiner, these are the first 2 important topics. Okay. So we will do one thing. We will break now, as of now, and we will rest of the portion we will cover in the next 2 sessions of the FEMA. So what we have a ECBs, we have a penalties part, we have a ODI part, and we have a import of services part. Right? 4 more topics, 4 little bit lengthy topic also. Perfect. Proven. Okay. So is there any doubt? Whatever topics we have covered, is there any doubt till these topics? We covered the definition part. We covered the PRII. We covered current account transaction, capital account transaction, right? Export of services, section 7. What else topics? Yeah, authorized person, right? So we have a different remaining topics also. First is ECB, ODI, penalty part, adjudication part, right? Import of services part and other section, miscellaneous other section, right? So this we will cover in different two lectures of our FEMA. And along with this, we will cover the MCQ part if possible. And along with this, we will cover the best question also. More questions, no problem. Okay, so this is from my side. Is there any problem till the lecture? Let me know. Accordingly, we can close the session. Yes. So till then, I already uploaded the charts on the ICI portal. Download the charts from there and just go through the charts in the best possible manner. On the on 27, we have a class. So first we will take the doubts till whatever lectures we have covered. Then we will again move forward. Right? Thank you.